Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Earnings season may be winding down, but you know what that means? The retailers are coming. And this earnings season, these are definitely charts to watch. Couple of the big retailers, Target and Walmart, have both already warned. And we continue to get warnings within earnings from some of the other retailers that have already reported. And it's not a pretty picture. So what's happening out there? Well, the retailers thought the good times were going to keep going. And so they ordered as much product as they could. Some of it got stalled on the supply chain issues. And so it's taken a little bit longer even to get here. And now demand is declining for many things as the consumer wants to go out, have experiences. They no longer want that Peloton. They no longer want that grill. They no longer want to put the new deck on the back. They want to go, travel to the all-inclusive resort or the amusement park. So these things are going to take a while to fix themselves, essentially. And so we're going to have a rocky road this earnings season with most of these retailers as they work their way through these issues. So which ones should you be watching this week? I brought 5 of the big retailers that are going to be reporting, and let's dive right in and see it's looking like with their earnings charts. The first chart you should be watching is Walmart. They're coming off a miss last quarter and otherwise a fairly decent earnings surprise track record, especially during the pandemic, which is those 2 other misses during the actual pandemic. But now things are going to get more interesting. They've already warned on this quarter. And so the shares have been rocky, but they are off those lows. And 1 month up 5.5%, but over the last year, now down 13.2%. That's not terrible, right? Like that's kind of holding up compared to some of the other retailers we're going to look at. But the PE for Walmart is not that low, still trading at 23 times. So I don't consider Walmart to be much of a deal here. Nobody's really thrown in, the gauntlet on this one and moved to the sidelines. So this is going to be an interesting earnings report. It always is from Walmart, but especially now this quarter. Then we're going to switch to the home side with Home Depot, ticker HD. They've got an outstanding earnings surprise track record, just that one miss right when the pandemic broke out. Otherwise, they've met or beat every other quarter. That's impressive during the pandemic again. So 8 beats in a row now. But these shares too, as you can see, down off those highs over the last year, they're only down 5%. And they have bounced off those lows, as you can see as well, up about 10% off those lows. But how is the valuation on Home Depot? Is this a much cheaper stock now that it's off of its 2021 highs? Not really. The same thing is happening here. PE is still 19.2 times, so not that cheap for Home Depot, given that this is a lot of uncertainty in this quarter. Are people still home remodeling? Are they still painting? What is happening with the consumer on the home side? So this is definitely one, along with Lowe's, that's also reporting this week. These are the 2 to watch on the home side. Then we're going to switch over to another one that has warned before the quarter, Target, ticker TGT. You can see they also did miss last quarter where they also warned. So they missed, they warned then they came out and they warned again. So things are looking a little bit rockier here, even after they put together that amazing streak from 2019. They didn't even miss during the pandemic. That is impressive. But these shares now down 34% over the last year, but over that month, they have rallied up 18.6%. So everybody's thinking that maybe the worst is already priced in here, and we've gotten the warnings, and that's all we're going to get with both Target and Walmart and these big diverse retailers, so to speak. But nobody knows. We won't know till this week. And what are these shares priced at? Trading at 20.5 times. So again, not really cheap. They do pay a decent dividend here, yielding 2.5%. So that is among the highest of this group of retailers I'm going to talk about, but still little on the pricey side for me. So I'm waiting on the sidelines to see what they say this quarter. Then we're going to switch over to the TJX companies. Now, remember, TJX is not just TJ Maxx, and it's not just Mike or Marshalls, it's also Home Goods. So they too have exposure to the home segment that was red hot during the pandemic and now probably is not. So this is going to be an interesting one as well with the mix. Now, also apparel has been getting hit pretty badly. So how badly is discounted apparel getting hit at both Marshalls and TJ Maxx? We don't know on that front either. Now, they have a little bit rockier time with the earnings misses and beats because Home Goods was not online. That was in store only. And that got hit very hard during the initial period of the pandemic and any kind of COVID restrictions. And just even the consumer not wanting to return to the stores as quickly as they were willing to buy online. But that's all fixed itself now. Everything is open in the United States. And so this one is going to be interesting with this mix. It is coming off that meet or beat last quarter. And these shares also up in the last month, up about 11% in the last month, but also still fairly pricey, trading at 21 times forward earnings here. So this is another one we'll be watching. And then we're going to wrap it up with competitor on the discount side, ROST Stores, ticker ROST. It too is a pretty good track record with just the 3 misses in the last 5 years and 2 during the more height of the pandemic, but it is coming off a miss last quarter. And so we'll see what develops for this quarter. There's a lot of balls in the air with any of these retailers, and the analysts, as well as the companies themselves, having a hard time getting a grip on what is happening in the business. This is when you're going to see a lot more earnings misses because there's all these different components that are very hard to model. So unless it's a company that is already warned again, like a Target or a Walmart has done, then the analysts flying a little more blind here this quarter than they normally would. So that's why we're seeing some of this volatility in the earnings charts, in the earnings miss and beats here. But this one's going to be interesting. Shares are down 27.7% over the last year, almost looking like they wanted to round trip there, but over the last month have rallied up 18%. Like all of these retailers are off the worst that we saw this summer, but is that the low? Is that the bottom? We don't know yet. ROST Stores, like the others, is fairly pricey, trading at 21 times. It does pay a dividend yielding 1.4%, so not quite as juicy as Target at the 2.5. But ROST, this is definitely going to be one to watch on the apparel side. They have some home accessories and things like that, like comforters and like I said, the accessory side, but not as much as TJ Maxx, which has home goods. So this one is definitely going to be a little different than TJ Maxx. So I'll be tuning in to see what is going on the apparel side. As you can see, even my video is a little bit uncertain about what's going to happen this week with these retailers. And there's even more than just these 5, but these are the big guys. And then we're going to get a lot of the niche retailers. What's going on with them? Some of them have overseas business, both in Europe and China and the rest of Asia. And so there's a lot of moving parts there as well. You don't want to miss a single episode of the Earnings All-Stars videos. I'm bringing them to you every week during earnings season, even as it winds down. So be sure to subscribe at zacks.com/YouTube, and I'll see you again next time with some more earnings charts.